All right, so welcome to yet another class. This is our Chief of Professional Trainers and yours, Samuel Ivanda. So we are here to take you again through financial accounting as we prepare for exams. So we are building on to the study you did for non-for-profit organizations. And we want to try out another question here, another examination question that will give you an insight onto what you need to basically know. So this is a paper that was done in October 2021. Let's make sure we mute our microphones. So the paper is 3 hours, 15 minutes, just like any other paper. And the first 15 minutes of the exam, you expected to use them as for reading. But since this is also a paper where you have to select questions that you're doing, then you also have to make sure that 15 minutes you can be able to select the questions that you're going to do. So section A usually contains objectives. So a student who's prepared for financial accounting should be looking out for objectives that you can use to prepare. And more especially, the clear examiner tries to examine and they're testing your understanding of certain principles of financial accounting. So yeah, you need to be able to look at some objectives at least before you get to the paper. And then we have section B, which has 5 questions and you're required to attempt 4. And each question carries 20 marks. So as you can see, they're telling you section A is bound separately from section B. You actually don't come out with the section A. You bound it separately. So as we can see, there are also other instructions that are usually in the answer booklet. So you make sure that you read those. So the first part of the question had a manufacturing question. So to do manufacturing, that will be one of the topics we're going to look at hopefully next. But for today, let's look at question 3, which had a non-for-profit. So non-for-profit organizations are usually organizations that are not looking for profits. Basically, they are set up for other causes. And some of these causes could be, for example, the associations that are bringing together a certain kind of people. They could be clubs. They could also be hospitals. Certain schools may fall in there. Certain women groups like the one we have here, the Social Club, and so on. So there are various that you can think about. Now, non-for-profit organizations have, as though they don't look for profits, they sometimes hold profitable ventures, okay? And some of these profitable ventures operate like normal businesses. So we have a case in example here. This is a question relating to Twegate, women's social club. So at the end of this question, it's very important, of course, as a student, before even read through a question, just to understand what are some of the things that are required at the end of the question. So that as you read through, you're able to capture some things within your brain on what you'll be able to write. So the question is asking us to prepare for Twegate's Women's Social Club for their in the 31st December 2020, a statement of profit or loss for the coffee shop. They want us to do an income and expenditure for the club, and they also want us to do a financial position for the club. So as we can see, there's a coffee shop. So this Women's Social Club owns a coffee shop. Which coffee shop is their business? Okay. So this information been given is at 1st January 2020. And this is what they have given us. They have given us land. Land, we know land is an asset, is a non-current asset that doesn't depreciate. They have given us a building, we can see here we have cost 180 million and then we have 125 million. So the two values, 180 million and 125 million, as this is cost, this is net book value, or what you can call carrying amount. How do we get the 125 million? We get the cost less accumulated depreciation to get the 125 million. So this has already been calculated for you. The same thing with the truck. The truck is 120 million. Here we can see the value is 98 million. Okay, somebody says share the paper. Okay, just a moment. Just a moment. So this paper can be gotten from the iSpar website. So if you're registered already, you can basically find it there. But I've also just tried to share it for those that are listening through this online. So truck cost 98 million, same story. Then we have current assets, we have ordinary subscriptions. Now, one of the things that you get to realize that non-for-profit, one of their most common sources of incomes are subscriptions. And these subscriptions are usually from members. So ordinary subscriptions basically means members contribute money, or let's say annually, to the organization, to the association. So once we see current assets once we see ordinary subscriptions under current assets, means that these are the ordinary subscriptions that have not yet been received by the non-for-profit. These current assets that we are seeing here, the ordinary subscriptions, are more like ordinary subscriptions that are outstanding that are not yet received by the club. So they are like ordinary subscriptions receivable, because ordinary subscriptions is one of the sources of incomes for non-for-profit organizations. So when you see it under current assets, then you know that that is ordinary subscriptions that are not yet received. Now, before you look at other items, you're going to see that there is another ordinary subscription that you find under your current liabilities in this same question. And I want to explain this too before we can proceed very further. So we have said that the ordinary subscriptions, these are ordinary subscriptions that are yet to be received. So they are outstanding. And then we have some ordinary subscriptions that are recorded under current liabilities. Remember, this statement we are looking at, this is a balance sheet or statement of financial position for the club, okay? For the club. So ordinary subscriptions being under liabilities means that there are some subscriptions that were paid in advance by members. There are some subscriptions that were paid in advance by members. If you're running a non-for-profit and members pay subscriptions in advance, those are regarded as liabilities because they have not, it's only after they have been utilized that we recognize them as income. If somebody pays subscription for the next 3 years, yet they were only supposed to pay on subscription for a single year, then the balance, they only take off the one for the year, and then the balance is taken as subscriptions that are received in advance, and these are recorded under your current liabilities, especially when they are going to be recouped within 1 year. So that's why I said when you find them under current assets, then you know that these are ordinary subscriptions that are outstanding, because they are, if it's the club that is now demanding its members, in this case it is an asset. If it's the members that have already subscribed to the club and this money was received in advance, then it's taken as a liability to us, the club. So let's proceed. So after we have that, next here they are telling us that cash and bank. So cash has been combined with bank, which gives us 21,500. Now, one thing that you get to realize is that for non-for-profit organizations, we don't have a cash flow, but we rather have what is called a receipts and payments. We have what is called a receipts and payments account. Then we have what we call prepaid utilities. Prepaid utilities are under our current assets because these are utilities that were paid in advance. These are utilities that were paid in advance. Then after that, we have our total assets. Then we go to what we call our accumulated fund. Now, accumulated fund, as capital is for private businesses, accumulated fund is what we have for non-for-profit. Non-for-profit organizations don't have capital, but they rather have accumulated fund. Then we have what we call retained surplus. We have what we call retained surplus. So retained surplus is what is that equivalent of what you call retained earnings for the other nature of business. Retained earnings for private, as it is called retained surplus for the nature of business here we have. Then we have non-current liabilities. So just like any other business, non-for-profits can also take loans. So as we can see, bank loans are non-current liabilities. Then we have what we call life subscriptions. Now, why is life subscription appearing under liabilities? Now, members, other than contributing ordinary subscriptions, they can also contribute life subscriptions. And how do life subscriptions work? A member will contribute money in regards to life subscriptions for a period, let's say 5 years or 10 years. So for example, I may contribute, let me say maybe I'm part of a club and I contribute, let's say, just look at it from the club perspective. So I contribute, let's say 10 million to the club as life subscription. So when I contribute 10 million to the club, that 10 million is for 10 years. It's life subscription for 10 years. So what that means is that every year they will recognize what belongs to 1 year. If I contribute 10 million for 10 years, means that to get what the life subscription they'll be recognizing for every year, it will be 10 million divided by the 10 years, which gives you 1 million. So 1 million will always be recognized for the year. So in year one, they'll recognize an income of 1 million in regards to life subscription from me. And then the balance, which is the 9 million, will be recorded under non-current liabilities. Why? Because it is after the years have elapsed that life subscriptions becomes an income to the club. So until then, it remains under your liability. So year two, they will still recognize 1 million. And what will remain under my under the non-current liabilities for the club is 8 million. Year three, they recognize another 1 million and they reduce what is under liabilities, which will be 7 million. So it will continue like that until all the money is done under the life subscription. So we are going to see how that one also works. And then under current liabilities, we have what we call accrued general expenses, which is 4,600. Then we have what we call ordinary subscriptions, which is 21,000. Now, accrued general expenses are these general expenses which at the end of the year were not settled by the organization. We incurred them, but we didn't settle them. Now, when recognizing expenses, we don't recognize expenses only that we have paid for. Even expenses that we have not paid for, but let that year have to be recognized. And that's what we call accrued general expenses. So when you look at, let's say, our records here, these records are as at January 2020. And when you go down, we are preparing books of accounts as at 31st December 2020. So the examiner provided you with these balances to show you that these are the balances the organization started with at the start of the year. So when you see accrued general expenses, means that this was the balance unsettled at the end of 2019 before we get into 2020. So that's why we are seeing this as our balance sheet. And after this, we get our total accumulated fund and liabilities. Now, what has been drawn here is what another person might want to call a statement of affairs. A statement of affairs usually looks at the beginning balances. A statement of affairs usually looks at the beginning balances. So this is more like a statement of affairs. So some questions will ask you to draw up a statement of affairs to determine the accumulated fund. So in this case, the statement of affairs was provided with the accumulated fund. You needed not to draw it. So that's a very important element to note. So next, they went ahead to give us the receipts and payments. Now, the receipts and payments is the cash book for non-for-profit organizations. So Twegate Women's Social Club has its receipts and payments for the period ended 31st December 2020. And here we have it as below. So they are telling us that the balance brought down is 21,500. The balance is brought down is 21,500. And then we have ordinary subscriptions. Now, before I look at the balances brought down, okay? If I look at the balances brought down, I want to reference back this 21,500 where? To here. Do we see this cash and bank in our balance sheet as at the start of the year? This 21,500 happens to be the balance brought down that is used in the receipts and payments. Like I said, we don't have a cash book. So that balance you're seeing here is your cash book balance. And even when we close up our receipts and payments, this balance that we close with, which is 1,600, will actually be what we are going to include as our cash and bank when we are drawing up our statement of financial position. So that is very important for us to take keen interest in. So our receipts and payments is more of like recording cash that has been received and cash that has been paid. So the debit side records items that have brought in cash, and the credit side records items that have taken out cash. So we have ordinary subscriptions, which is 105,400. We have life subscription, which is 25,600. Now, I want to still again get your attention on these things. Ordinary subscription basically includes how much has been contributed in terms of ordinary subscriptions for the year, in terms of cash. But this does not mean that this is the ordinary subscriptions income that has to be recognized for the year. Part of what has been received may be relating to balances that were outstanding as of last year, or part of it may be relating to ordinary subscriptions that are received in advance for the next year. But in terms of cash, this is what has been received. The same thing with 25,600. This is what has been received in this year. But this does not mean that all this amount has to be recognized as income, because this is just cash that has been received. So you're supposed to determine what relates to this financial year in terms of income recognition, okay? Then we have cash coffee shop debtors. This is the cash that has come from coffee shop data. So we sell on credit and our customers pay us at a later date. So this is the amount of money that we have received within this period. Then we have donations. Donations is another source of income when it comes to non-for-profit organizations. And then we have what we call fundraising income. That is also another income that we received in terms of cash during the period. Additional information, we have administration costs, we have general expenses, we have utilities, we have wages of coffee shop, payment to coffee shop, printing and stationery, we have audit fees, we have fundraising expenses that were incurred during the generation of the fundraising income here. And then we have the motivational visits, we have the workshop and trainings, and then we have the balance carried down. Now, when you come here, they give us what we call additional information. So additional information, they are saying, at the beginning of 2020, the club decided to start a coffee shop business. Like I said, non-for-profit businesses or organizations stand not to make profits, but they may start profit ventures in order to sustainably generate some income that can keep them going. So they started the coffee shop in 2020. That's why even when you look at the balance sheet they started with, you will not see any detail relating to coffee shop in this balance sheet. So they started this year of 2020. And then they are telling us that the club organized the fundraising event with the aim of raising funds. So we're able to see the fundraising income and also saw the fundraising expenses. So we proceed down. They also tell us here that the company, the club's policy to apportion general expenses, utilities, printing and stationery expenses between the club and coffee shop in a ratio of 4:1. Now, as non-for-profit businesses run, as they also run their so-called side business, they may share some of the expenses, which we have to be able to apportion. And they have already given us the ratio of apportionment. We shall see how that applies. So they have also told us the accounting policy of the club is to recognize life subscription over a period of 10 years. Like I told you, somebody who contributes money, like for example, we are seeing now receipts and payments for this year, we are seeing that we have life subscription of 25,600 that was contributed. So if the 25,600 that was contributed this year, they are telling you the club's policy, accounting policy in recognize life subscription is over 10 years. And then they are telling you that the opening life subscriptions has a remaining useful life of 5 years. So the one they contributed here, we shall recognize it for 10 years. But the one that we have in the opening balances, because these were the opening balances as at 1st January 2020. So they are telling you that this life subscription 25,500 has a remaining useful life of 5 years. So they have already charged it for the other previous years. It only remains with 5 years that are remaining. Then we proceed to depreciation. So they are telling us that depreciation of the non-current assets is as follows. Depreciation rate is, building is 2.5 on cost, and truck is 12.5 still on cost. Now, just like any other organization, non-for-profit also have assets, just like the ones that we have seen in the opening balances. So they are telling us that this building and truck are depreciated on cost. Every time they tell you that an asset is depreciated on cost, it's the same thing you're being told that the asset is being depreciated on straight line method. It's the same thing you're being told that an asset is being depreciated at straight line method. So that is very important to take in interest. If it's reducing balance, method, they may tell you that the asset is depreciated on its carrying amount or on its net book value, okay? Or on the book value, whatever they may want to use. But in this case, they have told us that the assets are to be depreciated on cost. And then we also proceed, they tell us here that the coffee shop purchases and sales were on credit basis. So we didn't have any cash purchase or sell for the coffee shop. They were all on credit. Then it proceeds to tell us that the club's balances as at 31st December 2020 were as indicated below. So inventory is 5,600, trade receivables is 12,300, trade payables is 4,400, prepaid utilities is 350, outstanding general expenses is 1,200, accrued ordinary subscription is 12,300, and prepaid ordinary subscription is 2,300. Now, these balances they are giving us are as 31st December 2020. The ones that we started with were for 1st January 2020. So these are the balances we have closed with. So our question still continues to ask us to prepare for Twegate Women's Social Club for the year ended 31st December 2020, a statement of profit or loss for the coffee shop, income and expenditure for the club, and they also want us to draw up what you call the financial position for the club. So we are seeing 6 marks, 9 marks, and 5 marks. So I hope that we've been able to appreciate the question. If we have, let's get down to attempting the question as it has been requested. So I also want to comment that whenever you're doing such questions, I say that non-for-profit organizations own profit ventures. And in this case, Twegate Women's Social Club owns the coffee shop. The first thing we shall always do is to calculate the profit that is coming from the coffee shop, because this profit that comes from the coffee shop is an income that is recognized under the income and expenditure for the club. So that is why we first draw the profit and loss to determine the profit that is coming from the profit venture, which is our coffee shop, and then we transfer this into the income and expenditure for the club. And then from there, we can be able to draw up our statement of financial position. So the so-called profit and loss is drawn up just like any other profit and loss. I'll just try to share my screen. So this is the coffee shop. I can call it Twegate Women. This is Twegate Women Social Club. Coffee shop. Okay. Once we have that coffee shop, we can now look at the details. Remember what we do when we are doing our profit and loss, because this is profit and loss for the period ended 31st December 2020. That is what we basically have. 20, 20. So when we are calculating this, remember we start with sales. Just like any normal business, because this is a profit-making venture. After sales, we less our cost of sales, which our cost of sales is usually opening inventory. We add purchases and less closing inventory. Of course, there are other adjustments that can be on purchases also to do like such. So let's go into our information and look for sales and look for purchases as well. Because of opening inventory, let's also look for opening inventory. Now, this is the question. Opening inventory is the inventory that you started with at the start of the year. So opening inventory would actually be gotten from here, from your current assets. But we don't have opening inventory. Why? Because this coffee shop was started at the beginning of 2020. So opening stock is 0. Now, they are telling us that since we are drawing up a profit and loss, we need sales. But do we have the sales? For you to get the sales, you come and look at your receipts and payments, okay? And see, do you have any sales that you sold during the period? Does any one of us see the sales? When you look at that, you see sales. Okay, so the only thing that I'm seeing to do with sales is this: cash, coffee shop, debtors. These other information, payment suppliers and so on, I don't see anything, okay? I don't seem to see anything else to do with sales here. In the additional information, do I see anything to do with sales? I don't see anything to do with sales, but I see something that it could be related to sales. We know very well that trade receivables come as a result of sales, okay? And remember, they told us that the coffee shop purchases and sales were on credit basis. So when you see 12,300 is outstanding at the end of the year, means that some sales are embedded in here. So I see the 12,300, and then I also see the 56,500. So how do I determine my sales? Do I add the two values together? And with that give me my sales? What do I exactly do? Now, when you determine your sales at this level, you use what we call control accounts. So I'm going to put working 1, and I'm going to have a working tab here, and I'm going to calculate my sales by drawing up what I'm going to regard as my control account. So I want you to observe very critically here. I want you to observe something very critically here, very important in the study. So whenever you don't have sales, and especially there are credit sales, we use what we call control accounts. Now, the control account we use to determine sales is called sales ledger control account. Sales ledger control account. So this is debit, This is credit. We use what is called the sales ledger control account. This sales ledger control account can also be called a debtors control account. Debtors ledger control account. Now, I want you to note something, that sales and especially credit sales and debtors go hand in hand. The higher the credit sales, the higher the debtors. Okay, the higher the credit sales, the higher the debtors. That is why this control account works on both of the two values. Now, what is the principle, and what would we exactly now do when it comes to once we have our two values? Again, I want you to see something critically here. So once we have our so-called control account, okay, once we have our so-called control account and we're drawing up to determine the so-called sales, we have our balance brought down for the debtors. So debtors have a normal debit balance. So balance brought down for debtors is written here, and balances or balance carried down is recorded here. So yours is to ask yourself, what is my balance carried down and what is my balance brought down for the debtors? So the debtors balance brought down would get it here from the opening balance, but since this is a new business, we don't have those debtors, okay? So our balance that we have balance carried down, which is the closing balance, which is the 12,300. So this 12,300 is our balance carried down, which I'm going to take and write here. So that is our balance carried down, okay? That is our balance carried down. So after I've written these balances, here is 0 because I don't have any values since the business was starting this year. After I've written my balance brought down and balance carried down, the next thing I do is I write items that increase. Items that increase my debtors balances are recorded here, and items that decrease my debtors balances are recorded this other side. I don't have to put the increase and decrease. This is just for demonstration. So I'll ask myself, what will increase my debtors balance? And the answer is new credit sales, because the more I sell on credit, the more my balance increases. So that is why I'll put my credit sales on the debit side here, because they increase my balance. And then I'll ask myself, what will reduce my debtors? What reduces my debtors are receipts from debtors, basically payments from debtors. When my debtors pay me, their balance that is outstanding reduces. I believe we agree to that, all of us. So as it increases, credit sales increase my balance, receipts from debtors do what? Decrease my balance. So let me remove the decrease and increase here. So do I have credit sales? No, I don't have credit sales. And the reason why I've drawn up this account is to determine the credit sales. Do I have receipts from debtors? Yes, I have receipts from debtors. And where are they? I have them. When I go to my statement of, when you come here, when you come to the receipts and payments, we have what we call cash, coffee, shop debtors. Cash, coffee, shop debtors. So we have, this is the receipt from your receivables or from your debtors, which is 56,500. So I'll come and record it here, 56,500. So once I have this 56,500, I'll ask myself, do I have any other item that affects my sales or my debtors? I'll look at the records here. So I look through here and see, do I have anything that affects my debtors? No. Do I have anything that affects my debtors? No. Do I have anything in additional information that affects my debtors? No. I already took the balance here. I've already taken the value that was in my receipts and payments, and that is all. So once I have that, I now add the two sides. So the two sides, when you add them, you get, we get 68,300. Okay, we get 68,800. So that will be the same balance, that same total that will be this side. But unfortunately, this side does not have any value. Our balance brought down was 0. Credit sales, we don't have. So since this side is supposed to have 68,800 as well, then it means that our credit sales in reality are actually 68,800. So my credit sales are actually 68,800 because of this value. So I cannot again put a balance here, brought down, balance brought down or balance carried down, because I already have a balancing figure which was 0 on this side. So I just put the figure on credit sales to represent the credit sales that I'm looking for. So this is how I calculate my credit sales. You're going to appreciate it when we are calculating our credit purchases, okay? Because they work basically in a similar way. So this is our sale ledger. In case we had other items that may affect our debtors ledger control account, like for example, return. If we have return inwards reduce our balance, our debtors balance. So they will be recorded here. Anything that reduces our balance will be recorded here. Bad debts will be recorded here. Discounts will be recorded here. Anything that increases our credit sales, like maybe more sales, they will be recorded here like that. So our sales value is 68,800. So I'll pick that and I'll come and put it here. 68, that, remember these amounts are in UJEX, 1,000. That is very, very important to take note. So those are my sales. So I less cost of sales. We are saying that cost of sales, you start with opening stock, less, you add purchases and less closing stock. Do I have opening stock? I said I don't have opening stock because when you go and look into your statement of financial position, which you started with here, there is nothing called opening stock. So we don't have opening stock. So if you're following through this question, make sure you have a pen and paper, that you're noting some of these things as I talk them, so that you don't have to forget. Don't just watch through the session. Make sure you have a pen and paper and the calculator as well, so you work with me along the journey. So opening inventory is 0. Opening inventory is 0. Okay. Add the purchases. So in the same way, I'll go and look for my purchases. So where should I find my purchases? My purchases will either be in the receipts and payments, or they will actually be in the additional information as well. So let's look in the receipts and payments and see what are some of the purchases we have. So purchases will definitely be on this side because money is getting out, cash is moving out. So I would expect to find them on the credit side. So administration costs, general expenses, utilities, wages of coffee shop attendants, Payment to coffee shop credit suppliers. Now, payment to coffee shop credit suppliers is not purchases. This is just a payment, okay? This is just a payment. So that is the only item that I see in the receipts and payments that relates to the so-called purchases. So the next thing, I'll go in the additional information and see, do I have any item that relates to purchases? Do I have anything that relates to purchases? When I look through, I don't see any. The only thing that I see that is similar to purchases is trade payables. Remember what they told us? That the coffee shop purchases and sales were all on credit. Trade payables arise every time we sell on credit. So when you see trade payables, you should be able to have it in mind that trade payables come as a result of credit purchases. So once I have trade payables, then I know this is related to, but this does not mean that this is wholesomely my purchases. So for me to determine my purchases, I'm again going to use control accounts. Control accounts is one of the topics that you need to learn along the way. But for today's class, and you use it across many other questions, even in the private sector. So I'm going to just use this information. Let me just try to clean this up so that it starts from zero, that you can appreciate. So instead of this being called a sales, this will be now a purchases. This will be a purchases ledger control account. And this, I'll call it purchases also. Purchases ledger control account. Okay, I can call it, let me call it payables control account, so that you're able to relate it with the above. Payables control account. Okay, so payables control account. So once we have our payables control account, we can now do what? We can now be able to determine our purchases as we are looking for them. So this is what you're now going to do. We are going to use the information we have, okay? So we are going to now, when you came to receivables or our debtors, our balance brought down was this side because these are assets. Now, in this case, these are payables. So our balance brought down is actually on this side. Balance brought down is on this side, and balance carried down is on this side. Balance carried down is on this side in small letters. Okay, that is what I basically do have. So balance brought down, what is my balance brought down? I go to my question and look for my balances brought down. Balance brought down is supposed to be in the beginning balances. And I'll look through and see, do I have anything to do with trade payables in my current liabilities? No. So my balance brought down will actually be zero. So this will be zero. I'll ask myself, what about balance carried down? Balance carried down represents the balance at the end of the period. When I come here, trade payables, my balance is 4,400. So I'll go and check it there. 4,400. Then after that, I'm now going to ask myself, what increases? Now, what increases trade payables will be on this side, and what reduces trade payables will be on this side. So what increases trade payables? Don't you think it's more credit purchases? Whenever you purchase on credit, your so-called trade payables value will go up. What reduces your trade payables? is what you call payments, suppliers, credit suppliers. Whenever you pay your credit suppliers, your trade payables will reduce. So now after you have done that, I'll remove the decrease and increase. After you have done that, you now go and get the respective values. So credit purchases is what we are looking for. So ideally, we have at least our credit payment to credit suppliers. So I'll come here and look for my payment to credit suppliers, which is 15,400. So just like any other account, okay? Just like any other account, so I'm going to record it right here. I'm going to record it right there. Just make sure that you also don't forget the degree of precision. Make sure that you indicate to say that these values are in UJEX, thousands also. This is very important even when you're doing these T accounts in the exam. So even here, I'll just try to include them, that we don't forget them. The T accounts are very, very important. Okay, like that. So you can see that we have now this. So we are now going to balance off this account. Okay, we did right. So we're now going to balance off this account. This is not yet right. So okay, these are right. What is down is not right. This is not yet right. So I'm going to balance off this account. So this side is 0. This side has sum up. This is 19,800. So this side will also need to be at 19,800. But unfortunately, we don't have credit purchases. So this difference goes to credit purchases. So ideally, your credit purchases is 19,800. Now, just like the way we did for our sales ledger, when we got 68,800, this is what we use as our sales, because the question told us that all the sales and purchases were all on credit. So we didn't have any cash purchase. We didn't have any cash sale. So any answer you get, you record it. Any answer you get for credit purchase or credit sales, those will be the sales or those will be the purchases. So these are the purchases. This 19,800 will be my purchases that I'll take to right here. Remember I said opening inventory, add the purchases. Then I'm now going to less closing inventory. Closing inventory, was that given? I'll look through my balances. So closing inventory, when you come here, inventory as at 31st December is closing inventory. So this is closing inventory, which is 5,600. So I'll just pick the 5,600 and take it to my question. Okay, 5,600. So that is what I do have, and this is supposed to be a minus. So let me determine my cost of sales. Sorry, this is supposed to be a minus. So cost of sales, my cost of sales will be, I'm just going to basically, they said this, add this, then we are going to less closing. So, but it already has a negative, so I'll just add it, that I could get the effect of 14,200. So this is the cost of sales that is supposed to get deducted from our sales to determine gross profit. So gross profit will be 68,800 minus 14,200. Okay, which gives us 54,600. That is what we get as our gross profit. Remember, we are still in the coffee shop. We are still in the coffee shop. After we have that, we now proceed. If we have other incomes, we'll record it there. If we don't have, we'll proceed and directly go to other operating expenses. So we shall say less operating expenses. So the operating expenses we are going to list here are only operating expenses that relate to the coffee shop. So the goal is to go through this information to determine what are those expenses that relate to the coffee shop. What are those expenses that relate to the coffee shop? So we have administration costs, general expenses and utilities, wages to our coffee shop and so on. But then we have a note that you need to take into consideration that told us that the company's policy is to apportion general expenses, utilities, printing and stationery between the club and the coffee shop in the ratio of 4:1. So what we are going to basically do is when you come here, we have these different expenses that we are going to distribute. So what I'll first pick those expenses that I don't have to distribute. For example, wages of coffee shop is a direct expense for the coffee shop alone. So that is what I'll start with. So I'll take the wages of coffee shop attendants. Wages of coffee shop attendants. I'll put the wages of coffee shop attendants, which is as given. This is 18,500. I'm capturing the right amount. So 18,500. Payments, this one is not an expense. Printing and stationery, this is also to be shared. Audit fees, this relates to specifically the whole club. Fundraising, motivational, workshop and training. Now, anything that relates to the coffee shop, they will clearly bring it and say audit fees for coffee shop or motivational fees for coffee shop. Anything that doesn't have any description of coffee shop, we take it to be general nature. So once we have that in mind, what we are going to basically do is this, okay? We have already recorded our wages. So let's first take this note into consideration. We're now going to look at other expenses. So we have to distribute between the coffee shop and the club in the ratio of 4:1. So we have general expenses, we have utilities, we have printing and stationery. Now, this is a receipts and payments account. And whatever you're seeing here is money that has been paid. That does not mean that it is the total expense for the year. Why? Because we also have outstanding and prepayments in the additional information here. And also in our opening balances, we had accrued general expenses and we had also prepaid utilities. So much more likely that even these payments that have been made, some of the amounts relate to last year, some of the amounts relate to what is prepaid for the next year. So we have to draw up the different accounts. We have to draw up our general expenses account and utilities to determine what is the expense for the year. What is the expense for the year? So for general expenses and utilities, those ones have an additional information into there, okay? So for printing and stationery does not have any additional information. There's nothing under prepaid or outstanding. The only value we have for printing and stationery is 4.5. So this one we can share. We can first work to sharing this. So under my working, this can be working two. Working two was this. This was working two. So the other one can be working three. This was working one. It's good to name these workings in the exam. Then let me get to work. Working three. So we are now going to share expenses between the club and the coffee shop. So let's start with printing and stationery. That is much easier. Printing and stationery. Printing and stationery. So printing and stationery, when you look at the accounts, it's 4.5. So 4,500,000. It's good to bring the 3 zeros as well here. So we are sharing it in the ratio of 4:1, where 4 relates to the club and 1 relates to the coffee shop. So what you first do here is get total ratio. So total ratio is equal to 4 plus 1, which is equal to 5. So it means that if I want to get the ratio for the club, okay, so for the club, the ratio will be 4 out of 5 times the 4.5. Okay. Four out of 5 times 4.5, which gives me that value. Then for the coffee shop, it is going to be 1 divided by 5 times the 4.5, which gives me 900,000, which gives me 900,000. So what I'll basically do is I'll come here and operating expenses. In addition to it, I'll put printing and stationery and put 900. So that is what I'm going to do for printing and stationery. Okay. And this is working 3. Working 3. So I'm now going to look at the next expenses. Let me start with general expenses. And again, I want to take your attention here. So for me to know my general expenses that I'm going to distribute between the club and the coffee shop, I have to first calculate them. Because when you go to your question, you come to realize that we have a lot of information to do with general expenses. We have information in the beginning balances. In the opening balances, we had general expenses that were accrued. When you come to the receipts and payments, we have the general expenses value. When you also get down to closing data information, we have outstanding general expenses. So yours is to ask yourself, how much was actually relating to this financial year? How much relates to this financial year? So what do we do Now we draw up our general expenses account. Okay. So I'm going to draw up a general expenses account, and I want you to be very attentive here. So I have debits, and then I have a credit. So I want you again to see how I'm going to play with these values. So in this general expenses account, I'm going to put my payables, which are outstanding general expenses, as well as what was paid. So the first thing I start with are balances. So this is a balance brought down, but it is outstanding. Accrued general expenses of 4,600 are your opening balances. Basically, they coming from last year, but they were not settled. So this balance of my accrued general expenses, I have to record it where? Here. So when you come here, do we record it here or here? Now, since this is a liability, accrued general expenses are liabilities, and liabilities have a normal debit, normal credit balance, I'm going to record this right here. So I'm going to call it balance brought down. Balance brought down relating to accrued general expenses. Balance brought down relating to accrued general expenses is 4,600. So we have the value there for 600. Okay. I even put it a little down here so I can record my degree of precision for the examiner to know that the figures that I'm working with are in 1,000. Okay. So this is my balance is brought down for the accrued general expenses. It's on the credit because it's a liability. Liabilities have a normal credit balance. So as I record my balance brought down here, the balance carried down will be on this side. So balance carried down will be on the debit side, on the opposite side. My balance carried down will be on the opposite side. So what is my balance that is carried down? I go to my statement. I go down. Balances carried down is 1,200. So this is what I'll pick. Outstanding. Outstanding general expenses is another word for accrued general expenses. The two things are the same. In all cases, those general expenses have not yet been paid. So take good note of that. So they are not different. Okay. So that is why I'm using the same word. So when you come here, I'm going to record 1,200. So after you have done that, you're now going to, you are going to look at two things. You're going to ask yourself, what could increase the outstanding balance? And what would reduce the outstanding balance? We are using this accrued general expense. What can increase your liability and what can reduce your liability? So what increases your liability are general expenses for the year. general expenses for the year. And what reduces your liability are payments made in the year. Those two words are different. These general expenses for the year includes what was paid and what is outstanding, but relates to that year based on the accrual principle. Paid made in the year means the cash that was paid in regards to general expenses within the year. So this is what we are looking for, and that's why we have drawn up this account. And this is what we have. Where do we have it? We have it in our records. When you go to your information, your receipts and payments, when you go to your receipts and payments, this that you see here, 53,000, is basically general expenses that were paid during the year. So I'll pick 53,000 and I'll come and put it here. 53,000. Okay. So after I've done that, I'm going to ask myself, do I have anything else that relates to this item? No. So if not, I'm going to add. This side gives me 52, 54,200. This side also should give me the same value. But since this side does not give me the same value, means that the difference is actually my what? The difference is my general expenses for the year. The difference is my general expenses for the year. Do we see that? Now, this is how we've calculated our general expense, but I just want to borrow your attention a little small, okay? Just want to borrow your attention a little small so that you can appreciate this thing very well, okay? Again, listen. So at the start of the year, you started well, you were being demanded for 600, okay? At the start of the year, you started well, you were being demanded for 600 in regards to general expenses. Along the year, you paid some money. How much did you pay? 53,000. So this 53,000 you paid was partly paying for the 600. Do we agree? I believe so. So the 53,000 that was paid is partly paying for the 600. So let's say we remove this 600 from the 53,000 to determine how much exactly remains after we have paid the 4,600. So when you get your 53,000, remove 4,600, you actually get 48,400. You get 48,400. So the 48,400 that remains after you remove the 4,600 relates to general expenses that were paid in this year relating to this year, not relating to the balance. So after you have your 53,000 right there, you come down and ask yourself, do I have anything that remained outstanding, even if I went ahead to pay? Okay, so you come here and they tell you that 1,200 was not paid. So yes, you paid 53,000 partly for the balance of last year and partly for this year. But in addition to that, there are just some general expenses that relate to this year that were not paid. So when you get this 1,200 and add it to the 48,400 that we were remaining with after we had subtracted 4,600, you actually come to 49,600. So you ideally come to this value of 49,600. 600. So whatever we have just done there is what a layman may try to figure out. But that is solved by us drawing up our so-called general expenses account. So this general expenses account has been able to help us determine this 49,600 in a simpler way, rather than having to think about it go systematically like that. So that is how this thing is done. So this 49,600 you've gotten is the total, okay? These are the total general expenses that were paid. But remember, they have told you that these general expenses are distributed as well between the club and the coffee shop at the ratio of 4:1. So I'll still again come and distribute this 49,600. So I'll come here, 49,600. I'm going to distribute it in the ratio of 4:1. So ratio of 4:1. So what I'm going to basically do, remember we got our total ratio to be 5. So for the club will be 4 out of 5 times the 49,600. But in this case, let me put the 3 zeros since it's outside the T format that I've drawn. So that is what I basically do have. So I have 49. So I have about 39,680. Then for this to be 1 divided by 5 times 49,600. I'll add the 3 zeros, which gives me 9920. 9920. So this is the distribution. So when I'm coming here, I'm going to write general expenses. And I'm going to pick this 9920 and I'll put it here. Put 9920. So that is what I'll put right there. Now I want to take note that this value we got here, this one, and this one is going to be used when we are doing our income and expenditure account. We are going to use it when we are doing our income and expenditure account. But for now, we only take the portion that relates to the coffee shop. So I want you again to be attentive here when I look at utilities. So that you can appreciate how utilities are going to be treated. So utilities, very similar to general expenses, have an opening balance of 4,200. These utilities were paid at 2,400. These same utilities again have a prepaid balance of 350. So what do we consider as total utilities for this year? This is what we do. We again go back and draw up our utilities account. So I'm going to draw up my utilities account. So I'm going to draw my T account. Okay, so this is utilities. Call it your utilities account. So this is more of a reconciliation account that is going to help us determine our utilities for the year. So in the same way, we have a balance brought down and the balance carried down. Now, in this case, the balance we have here is prepaid utilities. Now, prepaid utilities are assets and they have a normal debit balance. So they will be this side. So your balance brought down for utilities, okay? Balance brought down for utilities, prepaid, you can call it prepaid utilities. You can call it prepaid utilities is how much? When you come to what you have here, prepaid utilities, our opening balance is 4,200. Our opening balance is 4,200. So I can put my degree of precision in bracket here so it handles everything. These are in 1,000. So I can choose to put it here, okay? These are in 1,000. So as the balance brought down is written here, balance carried down, balance carried down for my prepaid utilities is written on this side. So what is my balance that is carried down? Is the balance that have been provided in the additional information, which is the closing balance of 350. So I'll come and record it here. 350. So after I've recorded my 350, I'm going to ask myself, okay? Remember here, I don't have any obligation. I don't have outstanding utilities. What I had was prepaid utilities. So here, since I have prepaid utilities, or for any kind of question, because sometimes you can have both the two values, what I'm going to basically do is, you're going again ask yourself a question: what increases and what decreases? Okay. So what increases your prepayments? Okay. What increases your prepayments are more payments. So payments made in the year, okay, increase our prepayment. So payments that were made in there are recorded here. And then recognitions, which is basically the utilities for the year, the utilities expense for the year, the utilities expense for the year is recorded on the opposite side, just like the way we had for our so-called general expense. The general expenses for the year are usually on this side, and payments that are made on this year are usually recorded on this other side. So the utilities that were paid in the year, I picked those from what? I picked those from my so-called receipts and payments. So I just come to my receipts and payments here. What was paid in utilities is 2,400. Remember, this is the receipts and payments because cash coming in and cash going out. So anything that is included here refers to what was paid and what was received. So 2,400, I'll come and record it here. Payments made during there is 2,400. Then payments, utilities expense for the year. Now, this is what I'm looking for, and that's why I've drawn up this account. So this one is not yet given to me. So after I've recorded everything to do with the utilities, I'll just add my two balances. I'll add my two balances, this side and this side. So this side should actually be 6,600. This side should be 6,600. So the difference will now give me the utilities that I should consider for the year. So my utilities that I should consider for the year is how much? 6 to 650. 6 to 650. So what am I going to do now? I'm going to distribute this 6 to 650. And I'm going to distribute it between who? Between the club and the coffee shop in the ratio of 4 to 1. The ratio of 4 to 1. So I'm going to do the same thing like what I've just done for the other expenses. I'll just come here. I'll just come and pick this. I put it here. I'm going to remove. Again, I'm going to do 4 divided by 5 times 6 points times not 6.6, it's 6 to 50,000 gives me 5 million. This will be 1 divided by 5 times 6 to 50. Gives me 1.250. So for the coffee shop, I'll come and record utilities. I'll record how much? I record 1,250. So I'll come and record 1,250. So I'll go back and see what other expenses have I not captured that relates to the coffee shop. So from here, remember we are distributing general expenses, utilities, and printing. So this one I've been able to record. Let me just see in the additional information if I have any other expense. So I don't have any other expense for now, but just in case, we can see, do we see depreciation there? Now, just in case there was any asset that relates to the coffee shop, would then depreciate it. But the buildings and track that we have been given do not relate to the coffee shop because it has not been stated so. There are some assets that they don't need to state them that they relate to the coffee shop or not. For example, if we had a coffee delivery van, that one you definitely consider it to be an asset for the coffee shop. But here, these assets are general, so they relate to the whole club. If that is the case, then and we don't see any other expense, because other expenses would definitely be in the receipts and payments. And we looked through, we said printing and session, we already distributed it. We said audit fees, fundraising expense, motivational fees, workshop and trainings. These relate to the whole club as a whole. And they don't relate to the coffee shop as an individual, okay? So that is very, very important. So if that is all with expenses, you now go ahead to determine your total expenses. You can get your total expenses, the total operating expenses. Which is a summation of this, which gives you 3050. So this 3050 has to be subtracted from the gross profit to determine our net profit. So our net profit is this minus this, which gives us 20,4030. So this is our profit. So this is the net profit from the coffee shop. Okay. So if that is the net profit from a coffee shop, let's come here. We have gotten our net profit. Remember our question was asking us to draw the profit and loss for the coffee shop. So we've been able to determine that. The next thing we are required to do is the income and expenditure account. So the income and expenditure, I'll just proceed down here. Still, I'm going to give it a heading, Twegate Women's Social Club. By this time, it's an income and expenditure. So the income and expenditure in this case is the P&L for the club as a whole, okay? What you would have called the P&L, but since this is not a profit-making business, it is called an income and expenditure account. So it is also for the period ending 31st December 2020. So the income and expenditure has categories of income. It has incomes, and then it has expenditures. Incomes, and it has expenditures. Now, if you've not, we have a class for non-for-profit. If you've not gone through the video for the class, I would ask you to go back, and if you're watching this as a replay, pause and go back and go through that video first. If not, if you're watching this as a live session, after you're done with this, make sure that you go back and go through that video. And this is why I first share that video before I share this. It will help you to appreciate some of these things a little more. Anyone who has gone through that first video, here they're just polishing up. So they need now to do like five questions to boost their confidence for this number for the exam. That is very important, that whenever I share something, take time and go through it. So incomes and expenditures. So I'll try to leave enough space for my incomes and expenditures. So these amounts will be UJEX, 1,000. Okay. So non-for-profit businesses have incomes. They have incomes, sources of incomes. And how do we get those sources of incomes? They are usually provided for in the receipts and payments. So ordinary subscription is one of the incomes. Live subscription is one of the incomes. Now, coffee shop, the coffee shop, we get the profit. The profit from the coffee shop is an income to the income for the club. So it is recorded under the income and expenditure. So what I'm trying to mean here is this, that this profit we have gotten here, this profit is actually supposed to be recorded under our incomes as one of the so-called incomes that we have. So profit from the coffee shop is an income that we have to record here. So that is why we have it being brought here. Are we together? I can put it in the second column. Right there. So that is what we have as our so-called income. So the next income that we are going to look at is what? When you come here, we have donations. So I'm first taking those incomes that don't have an additional information onto them, because live subscription and ordinary subscription have adjustments. So before that, let me first record what doesn't have adjustments to. So donations is another income that I'm going to put directly into my income and expenditure. So I'll just come and write it there. Donations is 34,400. Then I'll come here. I also have fundraising income. It's also a source of income. But for this, because I have fundraising expenses, I determine what is called the net fundraising income. So I get this and subtract how much we incurred in the fundraising to get the net income. That is what I record. So I'll just come here and say net fundraising, the net fundraising income. I record the net fundraising income. So the net fundraising income is 23,300 minus 8,400. So I'll just put it here in bracket just to show. Is 23,300, 23,300 minus the fundraising expense, which is 8,400, 8,400 in bracket. So this is the same thing that I'm going to just calculate here. Use your calculator. You should be able to get 49,100, 49,00 right there. Okay. So now sometimes they can write fundraising expense here, fundraising income here, and write the fundraising expenses under income and expenditure. Sometimes you can just get the net. So when you get the net means when you get to expenses, you don't have to record the fundraising expense because you have already gotten the net income right here. So let's proceed. After that, we now proceed to look at our ordinary subscriptions. And we're also going to look at our live subscriptions. But before we look at the live subscription and owner subscriptions, I want you to take note that these have additional information to them. So these ones have additional information to them. So first we have opening balances. We have an opening balance here and an opening balance here. Then we have some ordinary subscriptions that are in these receipts and payments. We also have ordinary subscriptions that are accrued and ordinary subscriptions that we are prepaid. So we have like 5 items of ordinary subscription, but all we need are subscriptions for the year. Those are the subscriptions that are recognized in the income and expenditure. So what am I going to basically do? I'm going to draw up my subscription account. And again, I want you to be more attentive here. Make sure you're not distracted because some of these things are important to your study. So subscription account. Subscription, or let me call it ordinary subscription just to distinguish it. Ordinary subscription account. So ordinary subscription account has many items. Now, we have balances, okay? We have balances. And those balances, we say those balances are coming from our balance sheet, that one we have been provided. So they have given us a balance, which is ordinary subscriptions under our current assets. So these ordinary subscriptions that under our current assets, I said, are outstanding subscriptions. Basically, subscriptions that have not yet been settled by the members, but they relate to the club. So these ordinary subscriptions that are opening balances that are assets are supposed to be recorded this side. So balance brought down, balance, call these, let's call them outstanding. So outstanding subscriptions balances are recorded this other side. So what do we have? How much we have is 34,500. Let me just put the degree of precision here. These amounts are in UJEX, 1,000, very important. So balance for outstanding subscription is that, and this is my balance brought down. This is my balance brought down. So as I put my balance brought down here, my balance carried down is supposed to be recorded on this side. So balance carried down for outstanding subscription is supposed to be recorded on this other side. It's supposed to be recorded on this other side. Okay. So what is my balance for this subscription? My balance carried down. Where do I get that information? I get it from my balances that have been given. Down here, I have balance for outstanding subscriptions. Now, the outstanding subscriptions are the so-called accrued ordinary subscriptions. This is the outstanding subscriptions. Ordinary subscriptions, accrued ordinary subscriptions, the same word for outstanding. So this 12,300 is what I have as my outstanding. You can call it accrued or you can call it outstanding. So I have my value there. So here you can actually even call them accrued. But so you know that these are your outstanding, basically unpaid. So we have that opening balance this side, closing balance that side. That is how we do for the opening outstanding subscriptions. What about the ones that are prepaid? The ones that are prepaid are these ones that you're seeing in the liabilities, because they have been prepaid by our members to us as the club, their liabilities. So what I basically do, this is my opening balance. Now this opening balance, this is a liability. I have to record it on the credit side. So I'll come here and record prepaid, call it balance. This is my balance brought down. It is on the credit side because prepaid liability, prepaid subscriptions are basically what? Liabilities. So you record your value there. It's 21,000. The value is 21,000. So as the balance brought down is this side, balance carried down is on this other side. So I record balance carried down. Balance that is carried down is on this other side. So what is my balance carried down for prepaid subscriptions? How do I get that value? I come to my balances. The balances have been given at the end of the year will give me my prepaid subscriptions at the end of the year, which is my balance carried down, which is 2,300. So I'll come here and put the 2,300. So after I've put the 2,300, what I'm going to basically do is what? What I'm going to do is now look at what increases and what decreases, because I've written the balances. Okay. So yours is ask yourself, what increases prepaid subscriptions? Don't you think it's more payments? More payments? Once we pay more subscriptions, then they increase the prepaid. What like we may not call them prepayments. Okay, let's in this case, let's call them receipts for the subscriptions. More receipts for subscriptions increase our prepaid subscriptions. So payments are supposed to be recorded. Remember, ordinary subscriptions is an income account. We saw that for expenses, payments were put on the debit side. In this case, payments for incomes are put on the credit side. Payments for subscriptions. And this is ordinary subscriptions. We need to continually distinguish the two things. So what was the payment for ordinary subscriptions that was made? When you come to your receipts and payments, the payment that was made for ordinary subscription is 105,400. 105,400. This is the payment for ordinary subs that was paid within the year. So I come and record it here. So after I've recorded the payment for ordinary subscription, okay, after I've recorded the payment for ordinary subscription, the next thing that I'm going to look at is the subscriptions for the year. So the ordinary subscriptions for the year is what is supposed to be recorded here. Do I know the value? No. How am I going to get the value? I balance off my accounts. So when you add here, the total here, you get 138,700. When you add up here, let's just add here, you get a less value. Yet you should be able to get 138,700. So for you to make sure that that value now balances off, you have to get the 138, which is the difference, less what is already there, okay? So ideally, for this thing to add to 138,700, it should be 109,900. So the ordinary subscriptions for the year is actually 101,900. So this is how we calculate the ordinary subscription in the ordinary subscription account. So this is very important because the examiner sometimes wants you to do this very often. So when I come here, under my incomes, ordinary subscription is actually 101,900. So I'll just come and record it here. These ones don't need to be distributed because this here we're talking about the club alone. So 101,900 is for the club, okay? Is for the club, as you can see, coming from our workings, okay? Coming from our workings. So the next thing, you make sure you number your workings and come and tag it here, okay? Maybe this is working 5. Now, the next thing you want to look at are life subscriptions. Again, I want you to be more attentive here so that you can also learn more about the life subscriptions and how those are supposed to be accounted for. So life subscriptions, like I said, in this case, this is usually money that is paid by the members and it relates to a period that is more than, say, 5 years or 10 years. So when you look at our question, again, go back to the question. Let's look for information relating to life subscription. Life subscription is first appearing under our balances here, and opening balances as 25,500. It goes on to also appear under our payments. We have a value here as well. We have a balance. We don't have any balance. But then we have a note. We have a note here where they're telling us that the club's policy is up. No. The accounting policy of the club is to recognize life subscriptions over a period of 10 years. So they are telling us that the opening life subscriptions has a remaining useful life of 5 years. So this so-called 25,500 has a remaining useful life of how long? 5 years. While this 25,600 that was paid for a period of 10 years. I repeat, the policy has told us that the accounting policy of the club is to recognize life subscription over a period of 10 years. Opening life subscription has a remaining useful life of 5 years. So what that means is that this opening life subscription is relating to the next 5 years. Well, this life subscription that we have here relates to a period of how long? A period of 10 years. So what we are going to do, life subscription is both, it is an income only when it has been recognized for that year, but any other balances that remain is recorded as a liability. And that is why we are seeing this 25,500 being recorded as a non-current liability here, because this is money that was contributed by the club members, but relates to several years. So to the club, it becomes a liability. So every year we keep on reducing the liability. So this liability has reduced now 25,500 and it relates to the next 5 years. So how do we do it? Recognize the liability, what we are going to recognize as the life subscription for the year, and then what liability will remain. We are going to draw up our life subscriptions account. We are going to draw up our life subscriptions account. Life subscriptions account. So this life subscription account is a liability account. Let's take it to be a liability account. Every time we receive life subscription, it's a liability to us until when the period elapses to which it relates to. So we have a balance brought down. We have a balance brought down coming from the account, from our accounts. When you come here, we have a balance brought down for life subscriptions of 25,500. Okay. During the year, there was again another payment that increased our obligation. So payment, or you can call it receipt. Receipt during the year. So the receipt during the year is getting from the receipts and payments, which is 25,600. Is 25,600. So they have told us that this is remaining with a period of 5 years. Well, this is for 10 years. This is just my working and to demonstrate something. So what this means, recognition for the year, okay? Recognition for the year is this. So for the balance that relates to the 5 years, what we are going to recognize for the year will be this value, which is 25,500 divided by what? Divided by 5 years. You get 5,100. So this is what is going to be recognized for this year, okay? Year 2020, relating to what we have for this opening balance. Then for the new life subscriptions, which relate to the 10 years, okay? The new life subscription that relates to the next 10 years. This one, we are going to recognize it for 10 years. So it is basically going to be 25,600 divided by what? Divided by 10, which gives you 2,560. So what does this mean? This means that if you want to determine what was recognized in the year to determine your balance, you come here and say life subscription for the year, okay, is the total of these two values. Life subscription for the year is the total of this, which is 7,600. So 760 was recognized as subscription for the year. If you want to get the balance that remains under your liabilities, the balance of this account, by doing what? Add these two sides. This side is added together to get 51,100. This side should also add to the same thing, but unfortunately, we have 7,600, so we shall have a so-called balance carried down of how much? Of just the difference between these two values. So you can see that now, when you add these two values, they should be able to give 51. So this 53,440 is our current liability. But for matters of our income and expenditure, this is the value that I'm interested in, which is the 7,660. So I'll just come here, life subscription. I'll come and write 7,660. That is what I'll record there. Okay. So after I'm done with that, I'm done with life subscription. I'll try to see if is there any other income that I've left out. That one I've recorded, this one I've recorded, this one I recorded it through the profit from the coffee shop. Donations are recorded. Fundraising income I recorded, I actually got the net income. That's what I considered. I don't have any other incomes, even the additional information. So if that is all, I'll go ahead to determine my total income. I'll go ahead to determine my total income. Put it under this column. After my total income, I'll go to my expenses, which is my expenditure, okay? So expenditure, how do I get my expenditure? Again, I go and look at what I have. Opening balances, there are no expenditures there. Expenditures are within my receipts and payments, okay? So I have administration costs. You make sure that the administration costs are not part of the costs that we are shared with the coffee shop. So administration costs are not shared. So, and they don't have any additional information onto them. So if they don't have any additional information onto them, I'll just pick them and I'll take them under my expenses. So this is coffee shop. I record under my expenditures there. So again, go and look for other expenses. Now, other expenses is general expenses, but general expenses, we already calculated the portion that related to the club. And we calculated it under our working. You remember when we calculated our general expenses, we calculated our general expenses and we say that 39,680 should be recorded for here. So I'll just come here and say 39,680. So 39,680 is supposed to be for the club, for general expenses. The other 9,920 was recorded for the coffee shop. Then the next thing I'm going to look at is the utilities. Remember, utilities are also expenses here, but we did some additional information onto them. So right here, I also go and only consider the ones of the club. And where will I get that information? I'll just come to my utilities. I already did. I got 5 million, which is 5,000 in this case, relating to the so-called club, okay? And then next, I'm going to look at the next expenditure. Wages, this is 100% coffee shop. Payment to coffee shop, this is not an expense, okay? And we already catered for it somewhere. I'll pick printing and stationery. So printing and stationery, I also made some working on printing and stationery. I had some work on it. I'll just come and pick my printing and stationery. It was 3.6. I'll just come and write 3600 here. And then other than printing and stationery, I also just come here and pick what? And pick my audit fees. Audit fees is 100% for the club. So I'll pick audit fees. I also pick workshop trainings. Now, let me first pick audit fees. So audit fees, it is 6,400. Also relates to the club as a whole. Fundraising expenses, I already catered for this when I was calculating the net income, so you don't cater for them. In case you recorded fundraising incomes as it is in your incomes, then you come and record the fundraising expenses. But for us, we already got the net of these two values, this and this value. So you don't record it. So we have motivational visits and workshop trainings as remaining. These, all of them relate to the club. So I will also come and put them here. So motivational visits is 1,300. So that one I record it there. Workshop and trainings, 1,800. Also record it there. So after I've done that, I can get my total incomes. I'm going to put them in under this column. My total incomes, my total expenses, sorry. But before I get my total expenses, I'll ask myself, do I have any additional information that has any expense that I've not recorded? Yes, I have what? I have depreciation. So again, I go ahead to calculate the depreciation. So I'll just come to my workings and first calculate depreciation. I'll first calculate depreciation. So depreciation, remember you have the building and then you have the truck. You have the building and you have the truck, and they have told us that these are supposed to be depreciated on cost. So you should get the cost of the two items from your records, and those are in our opening balances, 125 and 98. So 125 and 98. 125 and 98. So this is 125. This one is 98. But these are not the costs. These are the accumulated. These are basically net book values. So the values we need are basically these values, 180 and 120. Okay. So some students sometimes make that mistake. So 120, 180, and 120. Those are the values that we need. Okay. 180 and 120. So depreciation percentage. Depreciation percentage, the one that we are given. Depreciation percentage. Depreciation percentage is just check. We have 2.5 and 12.5. 2.5 and 12.5. 2.5 and 12.5. So these are recorded as percentages, okay? So what you basically do is to calculate the depreciation, it will be definitely 2.5, okay? Divided by 100 times the 180 million, which is 180,000. Okay, you can include the 3 zeros there. $2.5 divided by 100 times 180 million. It gives you about 4.5. Then this will be 12.5 divided by 100 times 12.5 over 100 times 120 million. So gives me one. I think I added more zeros. Let me just try to check. This is 120 million. Yes, gives me 15 million. So this is 15,000 and 4,500. So I'll just come here. It's a depreciation. Building. So building is 4,500. Then depreciation truck. Depreciation truck is 15,000. 15,000. And then after that, you just confirm that there are no other expenses that you have left out. And if that is all that you have recorded for expenses and you're very sure that there are not any other that you have left out, you go ahead to get your total expenses. Total expenditure, you sum up that to get that value. Then you get, now in this case, none for profit don't have profits, okay? So we have what we call surplus and deficit, or excess of income over expenditure, or excess of expenditure over income. So you basically be this subtracted by that. So do we see that? Do we see the 7320? That is our surplus, the one that we have gotten in our income and expenditure account. So that is what we basically do have. Now, the question asked us to calculate, draw up income and expenditure, and also asked us to draw up our balance sheet. It asked us to draw up our balance sheet, which is the statement of financial position. So the statement of financial position just looks like how? It looks like what we have as our opening balances. I think you can see how this has been arranged. So you just do the same thing, but now you're using values as at 31st December, not values as at January, okay? So that is what you're supposed to basically do. So just to demonstrate for you again. So you have Twegate Women Social Club income and expenditure account. Now this is now going not to be income and expenditure. This is going to be statement of financial position. And this is going to be as at, this is going to be as at 31st December 2020. So you start with your non-current assets. Start with your non-current assets. Remember, you have these non-current assets. You should look at the cost, look at the accumulated depreciation, and look at to get the net book value of those assets. So here under the non-current assets, you start with land, which does not depreciate. Land is 105. So this so-called land 105, you come and bring it here. So this one has this cost, and this is its net book value. There is no depreciation at all. So you go to the next transaction, which is building. So building has a cost of 180 million. Bring it here. 180 million. This reminds me of the degree of precision. Make sure that these amounts are in thousands. So 180 million will be 180,000 recorded there. Ask yourself, what is the accumulated depreciation and what is the net book value? So this question didn't give us the accumulated depreciation for the building, but we know very well that for you to get the net book value, you get cost minus accumulated depreciation. For you to get the net book value, the 125, you get this 180 minus accumulated depreciation. So accumulated depreciation at the start of the year is 180 minus 125. 180 minus 125 gives you, you'll be able to press your calculator. 180 minus 125 gives you 55. So 55,000 is the depreciation is the accumulated depreciation for the building at the start. Okay, 55,000. But that was the accumulated depreciation at the start of the year. If you're looking at accumulated depreciation at the end of the year, then you have to add the depreciation for the year. You have to add the depreciation for the year. The depreciation for the year for the so-called building was 4.5. Okay, was 4.5. So I'm going to add 4,500 on this thing to determine 49,500. So this one minus now this one now gives me 120,500. I'm going to do the same thing for the truck. I want you to be observant, if you've not gotten it at the first time. So the truck, its cost is 120 million as provided in the question. And at the start of the year, the cost was 120 less 98 gives you 22 million. So 22 million, which is 22,000, is the accumulated depreciation at the start of the year. So what that means, I'm going to get 22,000 plus 22,000 plus the depreciation for the year. The depreciation for the year is 15,000. The depreciation for the year is 15,000, which is that. So I have 37,000, which is this minus this, giving me 83,000. Okay, I get my 83,000. I hope we are following. So those are the non-current assets that I basically do have. Now, what I'll just basically go on to do is to basically do what? Get the totals, okay? Basically just get the totals. So total non-current assets is the summation of these values, which gives me 308,500. After that, I'm going to look at my current assets. Current assets, how do I get the current assets? I again go and look at my closing balances. From the question, you should be able to get your closing balances. So your current assets, again, are not in the opening balances. You find them in the closing balances, which they have given you. So at the end of the year, they told us the club's balances were as follows. So you have inventory and trade receivables. These are current assets. So I'll just pick them. Current assets, I'll just pick them here. Inventory is 5,600. Trade receivables is 12,300. After that, I'm going to look at others. Prepaid utilities is also a current asset, so I'll pick it and put it there. $350. Other than that, I also have to accrued. Okay, accrued ordinary subscriptions is also a current asset. Why? These are basically ordinary subscriptions for members who have not paid by the end of the year. So they are assets to the organization. So 12,300. 12,300 is supposed to be included here. Okay, as we can see, this gives you 3550. What does that mean? That means that do we have any other liability, any other current assets? Come and look for it. Here we've been able to exhaust. We've been able to get, there's nothing additional information. There's nothing in the receipts and payments. So those are our current assets. That is what we have under current assets. Apart from this balance, you see these receipts and payments, it has a balance carried down. Now this balance carried down is supposed to be recorded as our cash and bank. Just as we saw that the cash and bank that was opening balance here was the opening balance in the receipts and payments. So even the balance here in the receipts and payments acts as our cash and bank. And we can see that here it has the balance carried down is on the credit side, meaning the balance brought down is on the debit side. So it's a normal balance that we have at hand. So cash and bank, you can call it receipts and payments, is 12,112 that. So total current assets, just write with the total here, summation of all this gives you 153. That, so total assets is this value, 41,650. Okay, 41, 6, 50. After we have that, we now proceed to look at our so-called, now this time it will be liabilities and accumulated fund. Liabilities and accumulated fund. So you saw the same thing that was done with the opening balances here. We had after total assets, they went to accumulated fund. So let's just also move to the same thing. After assets, let's move to have our accumulated fund. Now, accumulated fund is like capital. In most cases, to remain the same. So we can see that it also remained the same here. Retained surplus. Now, retained surplus are like retained earnings. Retained surplus are like retained earnings. So we get this 59,500, which was the beginning value, and add the surplus for this period. So we shall get that 59 and add the surplus. How do we get the surplus? Is what we have in our income and expenditure. The 73,210 is supposed to be brought here, added to our opening retained surplus to determine the closing surplus. Okay, so 73,210. This is 73,210. It's supposed to be added here to determine our new retained surplus. Okay, to determine our new retained surplus. Okay. What do we get? Do some. So we get 132,710 as our retained surplus when you add the two values there. Then after that, we now look at our liabilities. Let's start with, in this question, in the opening balances, they started with the non-current liabilities. So let's start with the non-current liabilities. And the non-current liabilities, we are starting with the loan. Let's start with the loan. That is the bank loan, which is 1,500. This loan has not changed because we have not had any repayment. In case that was there, we'd find it in our additional information. So we have the loan. The next thing we have under here balances is life subscription. So you remember how we calculated our life subscription balance? You just go in the account that we did life subscription. We calculated our life subscriptions, the one that we have to record under working here. In the account, we got our balance carried down as 43,440. So that is your liability. That is your liability that you're supposed to recognize here, which is 43,440. 43,440. So after that, you ask yourself, is there any other non-current liabilities that you're aware of? If there's none, you proceed. You can get your, of course, you can get your total non-current liabilities. This is the total that we got here for this so-called accumulated fund thing. But for now, let me just move to the current liabilities again. The current liabilities, again, I'll just benchmark on how the opening balances were written. So they started with the accrued general expenses, then they looked at the ordinary subscriptions. So this is what I'll basically do. I'll just also follow the same order, but these values have changed.
My accrued are not still for 600 and my ordinary subscriptions are not this. So how do I get the new values? I'll just move to my closing balances. I'll move here. I'll move to my closing balances. This is my accrued general expenses, which I also said is also outstanding. So 1,200 is outstanding. It's a liability for me. So I'll come and record it here where there's my accrued. You can change the wording and call it outstanding, has no problem. And then I'll come to my ordinary subscriptions. Now the ordinary subscriptions that I'm going to record as a liability is this one that is prepaid. The members have paid in advance to us. So to us as the club, it's a liability. So I'll pick to 300 and I'll come and record it right there. 2,300. So I'll ask myself, do I have any other liabilities? Definitely. When I look at here, I see trade payables. So trade payables is another current liability that I'll come and record. 4,400. I'll ask myself, do I have any other that I'm aware about? At least I've recorded most of these. Nothing in the additional information that I should record. Again, nothing in the receipts and payments. This is to do with cash and bank. Nothing in the opening balances. If that is the story, I'll just get my total liabilities. So let me just get the total here. So total and elements of what you call elements of equity was that. Then under my total liabilities, just get a wholesome figure for all of them, but you can get the totals for each of them. That is what I have, which gives me, when I get total of these two values, gives me the total of liabilities and accumulated fund. Let me just get total of liabilities and accumulated fund, which is sum up this. It gives me 3,10650, which means my balance sheet is not balancing. So I'll just get the difference and be able to locate what I've not been able, what I've forgotten to record. So when you get the difference, you get 151,000. So I'll ask myself, what is the 151,000 that I've not recorded? Okay. So you get back to what we have. So right here, so this is a bank loan. This thing is not being captured. So this is 151,000. It's being captured. So when you get to see, you get to realize that it is now balancing. This is 461,650. And this one is also 461,650. So we've been able to balance our balance sheet. As you can see, when we're trying to do the balance sheet, we combined everything for the club and we didn't separate anything. So the financial statement of financial position is drawn up as a whole, while of course, the income and expenditure, you don't look at the things that relates to the club. When you're doing the profit and loss, you should be able to know that this relates to basically only the coffee shop. Okay. So thank you so much for listening in. I just want to get a comment from two people. Has this been clear and has this been helpful? Could you just drop a comment in the chat box, or have you gotten something today? Monica, Amon, Macklin, Jovia, Maureen. Have we gotten something today?
Yes, we have.
You have. Thank you, Jovia. Anyone else to comment?
Yeah.
Anyone else who has gotten something?
Yeah, yes, I also have gotten something.
Okay, gotten something.
Okay, fine. Thank you so much for the confirmations that we have not wasted time here. So you can revisit the video. You can revisit the question. Actually, what you do, try out this question on your own first, even before you look for the video. Try out this question on your own as alone and try to think about these things and remember what we have done. If you just end here, you forget. But when you try this out alone, then you're able to master. So thank you, Monica, for the confirmation, and thank you, Martin, as well, for the confirmation that you got on this. So I would love to stop this here.
Excuse me, sir.
Please, you're excused.
Excuse me, sir.
You excused.
Yeah, I heard you talking about the CPA website to pick the question papers and what have you. Kindly take me through on how to reach it, because the last time I tried, I totally failed to pick anything.
Okay. So just a moment. When you go to the CPA website, when you go to here home, there is this member student login. So you click on member student login. Member student login.
Yes.
So it brings you to a login page. Now for me, I'm already logged in. And let me see if I can log out. Let me log out. So it will bring you to this page like this. So once it brings to that page, then you put in your password. Okay. You put in your password, yes, whatever you have. And then it will take you now to where. So what I'm going to do, I'm just going to stop share so I can put my password. And you should have this account, like once you're able to pay, and I think they create for you an account, so you should be able to have those things. See. So this is what happens. So after you put your ID and your password, click on I'm not a robot, and click login. So to click login. So it brings you to this thing. Then you come here to download.
Yes.
Then you say I confirm. Then you come here, say member or student. Student, past papers, CPA, there are several of them. Just look for the year that you want, open, get the paper, click on it, it downloads, then you see it like that. In case you want solutions, you'll be able to also find the same. Click here, solutions, you'll be able to find the same thing like that. So I hope you've gotten it now.
Yes, I have. Thank you, sir.
Okay, all right. Thank you too. Somebody says last 2 recordings, my network was very bad. I'm going to share that, but you should have cleared all the tuition for me to give you the videos. Okay. So in case you've not, make sure you clear so I can give you the previous videos. And next time, if you're not clear, then you'll not be able to attend the next class. I'm going to share the link privately. Thank you so much and see you next time.
See you too. Bye-bye.